Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. SPY, just the slow grind up. It's definitely looking like this slow grind up that picked up some speed right before a hard drop. But we're looking at all-time highs. That's the only level left here. And if you're looking at it adjusted for the dividends in the 336s, without that, it's in the 339s. And there's tons of space for a daily high or low. The rotation that is going on that we saw on Friday, I talked a little bit about on an impromptu crypto live stream where we saw the dollar bouncing, the metals pulling back. We saw a significant shift in the financial sector breaking out, while the tech sector and the high flyer names that have been in blue sky breakout pulled back hard. We saw that Friday, and the setup was there for that to continue into today, which it did. But tech sector pulling back, while the financial sector is breaking out, is being offset as far as the S&P 500 is concerned. So IWM breaking out as XLF and the healthcare sector, XLV, matter more than the tech sector in IWM. Bull break over the high of the COVID bounce. Lack of resistance where we currently stand. 158.49, 162.76 are the next two levels. And just like other places, there is tons of space for a daily high or low. QQQ, very healthy daily consolidation. I have played bearish QQQ both Friday, recognizing that the sector rotation going on, and today, but we know we're just looking for a daily high or low. Could this be a bear or a bull flag? Absolutely. First hourly oversold conditions coming off the all-time highs, massive bounce. So the shorts that I've been taking have been day trades, and we're just looking for a daily high or low. This is very healthy consolidation, and the reason SPY is not pulling back when the tech sector is because the financial sector is breaking out. So I added a longer-term swing position in XLF on Friday, again noticing the rotation, and entered on consolidation in the 2460s. And not using any leverage or anything. It's just in my IRA. And stop right now is 24.15 because it was a double bottom Thursday and Friday. And I will move that stop up next time we set a daily high or low. But again, there's a lack of resistance in this range. If we can clear 25.12, which is a double top right now, there's a lack of resistance. So the bulls are loving that. We needed XLF. I think I said multiple times. We have to see XLF break this 2440s resistance zone for SPY to be looking at all-time highs. Well, here we have it, and we've seen a very notable inverse correlation between the tech sector and the financial sector since Friday midday and then all today, where they are very clearly doing opposite things, which is exactly what the S&P 500 bulls want to see, because we know the S&P 500 bears do not see any follow-through unless all of our major sectors are dropping at the same time. And that's not happening while XLF is making a bull break. XLV is just sideways. It's not on team bull and it's not on team bear over the last week. It's really not doing anything. So when I see a choppy range like this, I look at the extremes of the range. I care when we break 104.15 or 107.31 and 107.53. Those are the two levels that I care about. If we're not breaking any of those levels, we're just trading sideways, and I know we're not seeing much influence at all on the S&P 500. So tech down, financial sector up, healthcare sideways, which is keeping the S&P 500 extremely strong at this point. Biotech sector, key resistance on the daily, and it's a zone here, 115.42, 46, 51, 48, 54. You get the idea. Just a wall of resistance at that level, but a healthy daily high or low is trying to form to try and change the daily trend back to the bulls. And you can view this as a little inverse head and shoulders with our left shoulder, our head. This is our right shoulder trying to form. If we break that resistance zone, we zoom out and we look for, can we see a new all-time high into weekly continuation, or do we set a weekly lower high compared to 121.06? Semiconductors, just like the tech sector, very correlated. Coming off the all-time high, very healthy consolidation, no red flags at this point, holding the daily 12-period exponential support. It's less of an influence in SPY but it's still very healthy. And again, the noticeable difference, the high flyer names, I'm talking about OSTK, Blue Sky Run, GSX, talking about PTON, all of these smaller cap names that have been in Blue Sky breakout, they started correlating significantly with QQQ consolidation on Friday, and I'm watching that on a daily basis. How long is that going on? How long are we going to see these names pull back together? How long is the financial sector strength going to hang on? Are we going to see QQQ set a daily high or low and go to all-time highs? What's that going to do to our high flyers? Should I be looking for OSTK, daily high or low entry, once this consolidation gets a bit more follow through on the first hourly oversold conditions? Should I be looking for a PTON entry for a daily high or low, anything above 62.72? That's the way my mindset is working now. Played it bearish on the initial pullback, now looking for daily higher lows to potentially make bullish entries. The VIX is in its slow fade mode. Nothing's going on. Still in this channel that we've been watching. And nothing's going on. A break will be imminent sometime, but we could go all week in this slow fade mode. Although, once we start getting towards the end of this week, we'll be reaching this flex point. Gold, daily inside bar currently. If we see a bear break of 2015, more daily consolidation coming. We will then look to the daily 12-period exponential support, which has held for months. That will be our visual guide for the bulls to try and keep healthy consolidation that would favor continuation as long as that exponential moving average continues to hold. Very distinct difference with silver today. Look at the silver close. Inside bar close green versus an inside bar close red. Almost inverse days between the two. You don't see that often, but it's showing silver continued strength, high or low every day for the last 7 days. No daily consolidation underway. And again, the miners are weak. 4th day in a row now with weakness, while the metals and the S&P 500 are not showing us much weakness at all. So we're keeping an eye on it. But again, a little bit more timid bulls in the miner space than there are in the metals space. Oil, looking for a daily high or low at 41.06. Resistance is 43.52. We would have to fail to break 43.52 and break 41.06 to see momentum shift away from the bulls. But even then, it's the weekly uptrend that is most important for me because I'm looking for a monthly high or low. Or I should say a monthly low or high, anything under 61.44. It could happen here. It could happen at $55. But a loss of the weekly higher lows will be the first indication that our monthly lower high has been set. I got eaten alive by no seums working in the yard over the weekend. Brutal. 60 bites. Natural gas. A little bit toppy. Resistance of 223. Almost a little double top there, but again, very healthy daily consolidation. I would say continuation will be favored as long as the daily 12-period exponential holds support. So you'll see that I use the exponential moving average as a bit of a visual guide for favoring continuation or equilibriums. Hold it, we look for continuation. Lose it, we look for an equilibrium. And today, QQQ's first hourly oversold conditions, it can just add confidence. First hourly oversold coming off of all-time highs, although technically you could say we got there Friday as well. At the low of that candle, hourly RSI was just getting oversold. But hourly oversold, RSI was in the low 20s. And daily, look where we bounced. Right off that exponential moving average. I was a bit late today to my bearish entry on QQQ. There's a top fish at the high of the day, double top. The new low of the day was a nice entry, and I missed both of those. I was so in the zone, forgot about my own trading as I was doing the live stream, and then said, all right, I'll make my anti-FOMO entry on this bear flag. So entered bearish into SQQQ, put my stop over the high of the bounce at that point, and saw a decent follow through, exited half of my position into the strength, exited half of the position once the bulls proved follow through. If I were in the zone and not as distracted with life events, I would have looked to have flipped from bearish to bullish, but recognizing I am a bit distracted means I pump the brakes and I'm not in the zone trading significant positions, or often, 10 trade, 20 trade days when I'm really in the zone. Can't try and do that. I have to accept my limitations when they are present. And right now, outside life circumstances are dictating pumping the brakes, taking a trade or two a day, trying to stack on little base hits, but waiting for some things to pass, some hassle to pass. Hope you did well out there. Bulls keeping control. Let's see if we get all-time highs this week. We're going to have to see a significant shift in momentum in one of our sectors, I should say multiple of our sectors, if we're going to see any significant SPY bear action. As I've said in a recent video, again, I would not be surprised at any point for just a hard 3% drop, but there is no sign of it, and I'm not going to be looking for it on a daily basis. I'm just going to be protecting all bullish positions, knowing how these slow grind up moves often end. Have a good day. We'll see you tomorrow. Get it! So here's what remains of the sunflower row. Looks like a hurricane ran through here. But in reality, it's just the squirrels and birds doing what they're supposed to. And you'll see people posting, how do I keep these squirrels off my sunflowers? And the answer is you don't. You just let them eat them.